Welcome to today's program. I wanted to go over the housekeeping. Materials on the online attendance form are available for download from Dorsey's reminder email sent yesterday. We will also include a link to the online survey, which is new in our survey thank you email that's sent directly after this program. If you have any questions, please reach out to your usual Dorsey contact or the speakers. A CLE verification code will be announced during the program for lawyers and states that require it. And the CLE expected is listed below. Thank you, and back to you, Kimberly.
Okay. Yeah, go to the next one. So Tiffany and I are here to guide you through the wonderful world of foreign private issuers having to report under Section 16. So we're going to be running through a few things. So my name is Kimberly Anderson. I've been a lawyer for longer than I'm going to admit onto this on this presentation. And to my side is Tiffany Pearson, one of our esteemed paralegals, who does Section 16 reporting possibly better than anybody I know. We've been working together for a very long time, also longer than I'm willing to admit onto this on this webinar. But nonetheless, so we want to help you go through it because I must admit we are both concerned about the speed at which the deadlines are approaching, and we want to make sure that we can give you some guidance to go through this. So anyway, so our agenda today, I'm going to give you an overview of the Holding Foreign Insiders Accountable Act, going through getting codes, preparing the initial report. We're going to go through a brief Section 16 reporting overview, and then some recommended changes to your company policies and procedures so you can remain on top of this. So we'll get started with an overview. So in December, President Trump signed into law the National Defense Authorization Act, and in Section 8103, so in Section 8,000 sections, they included a very brief Holding Foreign Insiders Accountable Act. Effectively, what this means is that directors and officers of foreign private issuers who have never before been required to report under what's called Section 16 are now going to be required to report their beneficial ownership and transactions in company equity securities if those companies are reporting companies under 12B or 12G. We're not going to go into that, but if your company is filing a 40F or a 20F, realistically speaking, they are very likely registered under 12B or 12G. So initial reports are going to be due March 18th, and they also have to be posted on the company's website within 1 business day. Now, the Holding Foreign Insiders Accountable Act also gives the SEC the ability to exempt any person or security with, subject to substantially similar requirements. Excellent. So the SEC is going to be required to issue regulations within 90 days, which is when March 18th hits. Now, even if those new rules don't come out, you are still going to be subject to reporting beginning on March 18th. They are implementing rules, but to all intents and purposes, much of this has already been done because Section 16 under the Exchange Act has already been amended, and that will be effective on March 18th. So the exemptive relief, which, we're crossing our fingers is widespread, are not expected to be prepared in parallel with the implementing rules. So, they're not going to be done, in the same set of rules. We're expecting that they will be done in parallel. So it may be that the implementing rules come out first and there is no exemptive relief in them, but then the exemptive relief is going to be coming in a separate set of rules, a separate finding. So, and we know that they're going to be doing it by jurisdiction basis, and it will likely come out in tranches. So if the first exemptive relief comes out for, say, the UK, it doesn't mean that either, Canada or Europe or other regimes are not going to be exempted, because they're telling us that this may be coming out in waves and in tranches. So we've also been informed that the Edgar filing office is expected to put out guidance about getting filing codes in order to comply with this, though I don't think that guidance has come out yet. So we're here to give you guidance. Now, one thing that we were also told is that we are expecting the implementing rules to stick within, the mandate of the Holding Foreign Insiders Accountable Act. So in other words, it's not going to go beyond, because right now it's covering directors and officers. Section 16 for a domestic issuer covers directors, officers, and 10% holders. We are not expecting that these rules would be expanded to include 10% holders, nor are we expecting that they are going to be amending either Form 20F or 40F to disclose late filings. So we are anticipating that the rules come out will be they're going to color within the lines, and it will be just implementing the rules as they are to implement the changes to Section 16 that were part of the Holding Foreign Issuers Accountable Act. Now, we are knocking on wood that our expectations are correct because the rules are not out yet. But as it stands, it's a fairly limited application. And I know from your perspective, it doesn't feel limited, but compared to what some of our domestic issuers go through, it's a lower pain threshold. Let's just put it that way. Shall we? So here's one of the things we wanted to note. So right now in 2023, there were 1,100 foreign private issuers that were reporting on 20F or 40F. So if we assume that each issuer has, 10 people, directors and executive officers, that is a lot of codes for the SEC to process and get them done by March 18th. We are expecting that's going to put a real strain on the Edgar Filer office, which is already, struggling to keep up with applications. So we'll see how this goes and how smoothly this gets implemented. So this is where I'm going to turn it over to Tiffany, because I regard this aspect of it as being above my pay grade. And so we're going to go through what you need to prepare, et cetera, to be able to get codes, and then preparing that first filing, which frankly is probably more painful than most people expect.
Yes. Yep. So thank you all for coming. I'm sure you're overwhelmed with yet another US regulatory requirement, but
we are the busybodies of the world.
We're trying to make it a little bit easier for you with this info. So as Kimberly mentioned, the very first step is going to be obtaining codes for your insiders. And right now, this process takes 2 to 3 weeks without the additional influx of all these foreign private issuers. It just routinely has taken 2 to 3 weeks. The other component to this is that last year, the SEC rolled out Edgar Next. I'm assuming everyone on this webinar is familiar with Edgar Next because all of the issuers should already be enrolled in Edgar Next, but that was a whole process. And even people individuals that have had filing codes in the past may not have enrolled in Edgar Next if they haven't made filings in the last year, which means they have to basically start the process over again. So a CIK, which is the number that the SEC assigns to filers, it's unique to an individual and it stays with that individual for life, similar to like a social insurance number. The very first step, and so you need to identify your reporting insiders, which is going to be your directors and then your senior officers, and we'll go over that in a moment. But you identify those folks, and then someone needs to check for existing similar names in the SEC database. If someone has a similar name, you either need to find out if it's the same person or confirm that it is not. If you have someone with exactly the same name and you submit an application, the SEC is going to reject it. And either they'll reject it, and you'll either have to come back and say, nope, we already checked, this is not the same person. Or they'll reject it and you'll say, whoops, I never checked. In either case, it's going to delay your codes by another week or two. And you cannot prevent this on the front end other than checking the names and applying for CIK codes. There's a different way to apply for someone that already has CIK codes. So if one of your filers filed for a company in 2010 and they have Edgar filing codes, they're going to file a different application than someone that's never had filing codes. So After you've identified the insiders, there's a special database I can share with everyone that you need to check. It's on the screen there. That it's not the right, don't just look them up in the search SEC filings. You need to use the website edgarcompany.sec.gov that's on the screen. That'll give you a list of all the similar names. And then you can determine whether or not you need to use a full middle name for one of your applicants, or if you need to find out if they made a filing, 15 years ago. Everyone that isn't enrolled in Edgar Next, regardless of whether or not they have a CIK, so new applicants and folks with existing CIKs that never enrolled in Edgar Next need to sign in front of a notary a Form ID application to obtain codes. We highly recommend that someone familiar with Edgar Next be named as an account administrator on that initial Form ID application. If that's the insider and they know the Edgar Next system, that's fine. But if only the insider is named as an Edgar Next administrator on the Form ID application, and they don't have a power of attorney and not a notarized power of attorney naming an alternate person, and that insider can't access the Edgar Next system because they can't get a login.gov account or they don't know how to navigate the system, they'll never get the codes. So we really recommend that 2 account administrators be named on the Form ID application, and that generally requires a notarized power of attorney. We also recommend that you get Section 16 power of attorneys and an e-signature designation by all of your insiders, and we can go over that in a minute. All the for whoever at your company has access to Edgar Next can generate Form ID applications. Everything's done within the Edgar Next system. And if you should have somebody that can access the Edgar Next system, but for anyone to access the Edgar Next system, that individual needs their own individual login.gov account. You cannot share login.gov accounts. It has to be someone's individual email address. You have to have a 2-factor authentication method, for example, a private email, your cell phone number, your office line. You cannot share your login.gov account with somebody else, and you cannot access the Edgar Next system without a login.gov account. And then just in case any of your insiders have trouble accessing a notary, Virginia, the state of Virginia does allow remote notarization. So just keep that in mind. I think I went over all of that. And then we were going to give you a little guidance on identifying your Section 16 insiders.
Yes.
So I'm going to turn it back over to Kimberly. I'm going to flip it.
Yeah, so we previously provided the full list, but this is generally speaking the people that are typically covered. Your president, principal financial officer, principal accounting officer, which are frequently just the same person as the CFO, vice president in charge of a principal business unit, division or function, and then any other person who performs policy-making function. So if you are considered an executive officer, and I realize I have a typo in there, I'll have to fix that. But the list is similar to what is frequently required in Canada. However, please note, designating someone as an executive officer is not a gift. So I once had a client who had like 15 executive officers, and they said, people really like being named. They think it's cool. Yeah, no, just do yourself and them a favor and only name the people who are executive officers who really are. And we strongly recommend that the board is the one who makes the final determination. Management can look at it, but who is an executive officer is a fact and circumstance test. And there's a great deal of deference to companies. So you'll look at the definitions, and sometimes you may end up using the same list as people who file report in insider in Canada or other jurisdictions. But sometimes those lists differ. We have some clients that have a longer list in Canada than they do in the United States because they're fully subject to Section 16, and that's fine too. But we do recommend that you go through, talk to the board, make a recommendation, and have the board determine. And we have clients, we recommend that they determine this annually, who is subject to Section 16. So who is determined to be an officer, to make sure that it's absolutely clear who the company believes is covered here. So, and some of the questions are like, is the corporate secretary considered an executive officer? We don't consider someone who just holds that, office as being an executive officer, but many times it might be combined with another, it might be combined as a title with someone else who would otherwise trigger that requirement. So it really does vary by company. So, take a look at it and think about it, and then determine. Sometimes the trickiest ones are the people who have policy making determinations, and sometimes the hard part. But nonetheless, why don't we think we can keep going?
Okay, once your insiders have codes, you're going to need to file on March 18th an initial Form 3 listing or reporting all of that individual's holdings in the issuer. And there are some mechanical issues. Once your insiders get filing codes, an Edgar Next account administrator is going to have to go in and delegate filing authority to whoever's going to be making that Form 3 filing. If you have insiders that already have filing codes and are already enrolled in Edgar Next, so there are a lot of directors that might serve on other boards for reporting issuers already. Someone that's an existing account administrator will need to push some buttons and pull some switches to make it so that filings can be submitted by whoever your filer is going to be for the Form 3. There are some differences between what's reported on the US side and what's reported on the Canadian side. So we usually start with a SETI summary. It's easy to print the report online. We can get an idea of what everybody owns. The differences are that on the US side, if common shares are held indirectly, like through a spouse, through a minor child, through some trust or other entity that's controlled by your reporting insider, we break those out into separate line items for purposes of Section 16. So that's one difference. The other difference is that for derivative securities, we don't aggregate those unless they have exactly the same terms. So, for example, if you have option grants every year, those option grants will have a different expiration date. They usually have a different vesting schedule, and they have a different strike price. On SETI, those are often aggregated. So somebody who holds 1 million options on the US side, they're different line items and they're never aggregated. The one derivative security that's usually aggregated are deferred stock units, because DSUs don't have a strike price or a vesting date. But other than that, almost everything that's going to be in table 2, I have a sample here. There's a table 1 for non-derivatives. That's all your common holdings. And then there's a table 2 for all your derivatives. So all your warrants, options, restricted stock units generally go in table 2. If we have time at the end, we can go over some of these reporting nuances in greater detail. But the main point to keep in mind is that there are some distinctions or differences between Canadian side reporting and US reporting. Another difference is that the US reports are due within 2 business days. There's no monetary fine if you are late, like there is on the SETI side, but they're due within 2 business days. And often Canadian holidays are not US holidays. So that's still going to count as one of your business days. Just a note, I mentioned this in passing earlier, but for signatures, the SEC actually doesn't accept electronic or digital signatures like DocuSign without a manually signed e-signature attestation form from the individual that's doing the signing. We highly recommend that when you initially obtain codes and you get everything set up in the beginning, you have all of your insiders sign manually, wet ink, an e-signature attestation form that the issuer keeps on file. With that 2-day deadline, it is very difficult to get these filed on time if you have to chase down signatures. We also highly recommend that, and this is optional, but we highly recommend that each of your insiders designate someone at the issuer to sign these Section 16 reports on their behalf in case they're traveling or otherwise unavailable.
And for most of our filers, it's just common practice to have an insider actually file all of these as, as their attorney in fact. it does make things easier. So as soon as grants are approved, that 2 business days happens really fast.
It does.
So it's just easier if you have a person on the inside who's both reviewing it, working either with us or someone else to make sure that the forms are correct and to approve the filing with their signature on it. So it doesn't yet then has to go to somebody else for their approval and so on. So we strongly recommend that at least one person and possibly 2 at the company are designated as attorney in fact. Oh, just so you know, we are not permitted to be attorney in fact.
We don't sign section 16 reports.
We can help you with all of this, but in case you're thinking, oh, let's have Dorsey do it. Yeah, we're not allowed to do it. But just so you know that these are just some of the things that make it easier because the SEC is old fashioned in some ways. Everything always had to be wet ink until this recent version of the e-attestation. Though my favorite part of the electronic signature attestation is it has to be a wet ink signature, but you're allowed to store it as a PDF on your electronically. So anyway,
So
go ahead.
that section 16 power of attorney gets uploaded to the SEC, not every time, just one time. So the power of attorney is something that's filed with the SEC. The e-signature attestation form is not filed with the SEC.
Right.
We just need to know that you have it. I think that's all I have. Form 3.
Yeah. So, yeah, I think that's it. So this now goes to me. And so I'm going to go through the basics. You have to understand section 16 used to be, like a series of books. They were tomes with filing handbooks. It's now all electronic, but, okay. And so we will be, all of that, gets done electronically. So there's huge amounts of nuance to filing. However, look at the bright side. You're only subject to reporting and you are not subject to short swing liability, which was called section 16B, which was profit disgorgement. So this is just a disclosure requirement. It is not a short swing liability requirement. So much of the nuance and the stress was always related to the liability portion, not the reporting portion. Go ahead and I'll give them the code.
Well, and one more thing, after the initial form 3 is filed, and assuming that there's not some rule that says Canadian issuers are no longer subject to this requirement, a form 4 will be required anytime there's a transaction. And that means anytime there is a transaction. And those form 4s are required within 2 business days. So if you have someone selling or purchasing stock, form 4 is required within 2 business days. If you grant stock options, a form 4 is required within 2 business days. If you have RSUs that vest, a form 4 is required in 2 business days. So just keep that in mind.
So as we were talking, and this is just sort of a quick overview, that it's section 16A. This is insider reporting. For your purposes, it is only directors and executive officers. It does not include 10% holders. We are not expecting that this rule will be expanded to include 10% holders. So it really is just directors and officers. Go ahead. All right. So now here goes into what securities are covered. Essentially, it's all equity securities. If the company has, debt securities, but it's not convertible into equity, then it doesn't need to be disclosed. But so it is not just stock, as we talked about. It's DSUs, RSUs, stock appreciation rights, unless they're just settled in cash. So, it's so pretty much, it doesn't have to be issued by the company. If there is an exchange traded option, or if you have a commercial put option or otherwise a third party put option, that would also have to be disclosed. So anything that effectively touches the equity security of the company triggers reporting. So, and it also would include, as we noted, indirect issues. Sometimes there's, family holdings, things are put in trust, partnership, corporate holdings, depending on your relationship with that corporation. It could actually, trigger reporting. For example, if there is corporate holdings and you as the insider is the sole director, it may trigger the holdings of that entity as well. So it can be quite quite broad. Now, keep in mind if, with respect to things like trusts and partnerships and corporations, unless the insider, really has a significant role, even if those entities have 10%, they're not triggered by these rules, whereas they might be otherwise. But nonetheless, an insider's holdings is not just what they personally. So Form 3, as we discussed, it's going to be on or before March 18th. Now, I will note to you, we are a little worried about how many reports we can actually file on a day. You can also talk to your filer. So if we don't see exemptive relief, it may be that if your forms are ready, you may decide you want to file them in advance to make sure that they are timely. So we can discuss that, but we are actually concerned about the capacity to be able to get everything actually pushed through on the same day. Though your Edgar filer may be perfectly able to do that.
The system closes at 10 p.m. Eastern every day.
Yeah.
And it's closed all weekend. And once it's closed, you can't submit a filing. So
yeah.
Anything that hasn't actually been submitted by 10 p.m. Eastern time on March 18th is not going to be submitted until the next day.
And for those of you who are scratching their heads and saying, I thought it was 5:30. It's 5:30 for companies. It gets extended a little bit for individual reporting. So Section 16 holdings go up to 10 p.m. Eastern, not 5:30 p.m. Eastern for company filings. And yes, if you ask me if that's archaic, yes, I think it is completely archaic. It is on my list of things that I would love to expand Edgar hours, but I do not rule the world, which is unfortunate.
And the one distinction is that you're not filing after the deadline if you file after 10 p.m. If it's after 10 p.m., you're not filing.
Right.
Because
the
system is closed.
Yeah. Yeah, the system actually shuts down. So for like a company, if they're trying to make a filing, sometimes they will file after 2:30. The system is still open, but it posts and is filed the next day. But once you hit 10 p.m. Eastern, the system is it's done for the day. So you can't submit even for something to be posted the next day. And if you say to yourself, I have no equity security. So I'm a director, but I don't own anything yet. I won't get anything until next month. It doesn't matter. It just means that your Form 3 is much easier to file because everything is a zero. So, and it's very, very common actually for new directors to have zeros next to their name, because let's talk for a second about directors and officers who join after March 18th. Because right now we've been talking about you got to get everything prepped in advance for March 18th. But if these rules go into place, and the rules will go into effect, and the question will be, what jurisdictions are exempted. But let's assume you're in a jurisdiction that is not exempted. So someone is going to be joining as a director on April 1. Okay. So as we've been noting, it's been taking 2 to 3 weeks to get codes. So as you're talking to people, if you believe they're going to be coming on board, it's best to try to get your Edgar codes and start that process as soon as possible. So or maybe they have codes. So if they join on April 1, they would have to file, they have 10 calendar days to file their Form 3, which is your initial report. Form 3 is your initial report. Form 4 is your transactional report. But, if you join as a director and then you get grants at the same time, which is very common, that initial grant is not on your Form 3. It's on your Form 4. So in other words, if let's say you have no securities and you're going to get a grant of DSUs as soon as you join the board, your Form 3, so the Form 4 that reports that grant is due in 2 business days, which means it accelerates the filing for your Form 3. So your Form 3 goes first and then your Form 4 goes. So even though the Form 3 is technically due in 10 calendar days, most people really have to get that accelerated because many directors or officers will get grants at the time they join. And those grants have to be filed that grant disclosure has to be filed within 2 business days.
And note again, it's currently taking at least 2 weeks to obtain filing codes.
Yeah.
So if a regular reporting issuer tells me today that they have a new director starting and I start the process of applying for codes, I am not going to get those filing codes in time. So as soon as you know that name, you should start the process of obtaining the filing codes.
Yeah. So, and let's just be clear, if you're trying to get codes and the SEC is just slow, still just try to get the codes and so on. Don't panic. I think the SEC is just going to be very, very slow in this process with this transition. So just start as soon as we can. Oh, wait, go back. Form 4s. So your Form 4 is your transaction report. So your Form 3 is just to get you in the system. Yeah, this is what I hold initially. Your Form 4s is really everything else. Every transaction, change in beneficial ownership, except with limited exemptions, by the end of the second U.S. business day following execution. And so it's going to include things like open market purchases and sales, grants, exercise of stock options, settlement of RSUs or vesting, generally speaking, is, because it's triggered by vesting, or determination of shares to be issued pursuant to a PSU grant. So all of these different things trigger reporting, and they trigger reporting within 2 business days. Now we can flip over.
Yep. And just for clarification, if you issue option grants on a Monday, your filings are going to be due by 10 p.m. the following next day. If you issue option grants on a Friday, then the
Tuesday.
Tuesday.
The following Tuesday.
The following Tuesday. Yeah.
So 10 p.m., second business day following execution. Okay, here's the weird thing. There are some bullets here with respect to 10b5-1 plans, which is a pre-planned trading. It's a trading plan that was entered into in advance. There are some slight exceptions to this. We are not going to go into this, but note that because many times these trades are outside of the issuer's control, they don't know when they happen. There are some slight exemptions so that it kind of triggers when you either get notice of the trade, et cetera. We're not going to spend a lot of time on that one, but if you have issuers that a number of them have these trading plans, that might be something that we would need to, give you a little more advice on and so on. So, because you get a little bit of wiggle room on that one, because sometimes you don't get notice of the trade until it's actually occurred or until after it's occurred. And so there's a bit more grace there, but, generally speaking, just go with 2 business days. And then Form 4s, it's very funny. The SEC is very much kind of changes views on this one. So there's something called an exit report. So let's say you have somebody, a director who, or an officer said, you know what, I'm retiring. So at that point, you've got the concept of reporting. You can file what's called an exit report, meaning that you can file a Form 4 that does nothing more to say that, yeah, I'm no longer subject to Section 16 reporting. Now, that is not to say that for, there might still be a look back, but that's a little bit beyond the requirements here. But nonetheless, it used to be that the SEC said, no, don't do just exit reports because you're mucking up the system. People do them all the time. And a lot of people just want to make it clear that, yes, as of this date, I'm no longer a reporting issuer. I'm no longer a reporting insider for this issuer.
And we generally recommend those because it makes it very clear that that person is no longer subject to the Section 16 reporting requirements for that issuer.
Right. And it establishes the date, et cetera. Okay, Form 5s. Now, I will note, we don't actually file that many Form 5s. These I generally regard as, or do you get a lot of them? Most of the issuers that I work with don't tend to have many Form 5s, mostly because these are due 45 days after the fiscal year end. They're kind of either cleanup reporting or for some small types of transactions. We strongly recommend that you don't rely on Form 5 and you report everything on a Form 4 as you're going through the course of the year, because otherwise you will simply, forget about it, to be honest with you.
It's just too.
Yeah. So we strongly recommend that you don't, but it's a nice way to clean things up. Like, it's like, Bob decided to do a trade. It was $1,000. We forgot about it, et cetera. It's like, and that's all he did. There's some things that you can appropriately clean up on Form 5. There's a list of things, but most people try to grab them as they go along during the course of the year, because otherwise it's just too easy to forget. It's typically for December year-end company. It's typically Valentine's Day. Yeah. That seems ironic. Anyway, so that's the Form 5. So those are the 3 forms that, are covered under Section 16. And for those of you who are wondering, hey, what about Form, 13 Ds and Gs? Completely different animal. You've always been subject to those, and that's not new. So, but we're also not covering that here. And so that's if you have 5% or more. No, greater than 5%. So anyway, so let's move on. So failure to file. This is a question we've been getting a lot. So failure to file. If you were a domestic company fully subject to Section 16, you are required in your annual reports to it's sort of a name and shame concept. Like you have to indicate, who filed late, how many transactions were late, how many days they were late. It's kind of again, like we said, we are fundamentally Puritans in the United States. And so, public shaming is something that we love. So it's in there. We are not expecting that requirement to be added to 20Fs or 40Fs. I must admit I was expecting it, and we had some calls with the SEC, and they kind of gave us an indication that they can't promise anything, but they're not expecting it because, like we said, they're not expecting to go outside of the terms of the Holding Foreign Issuers Accountable Act. But the SEC does periodically bring enforcement actions, and it could also be brought against the issuer for not having appropriated, for essentially facilitating this failure. It doesn't happen a lot. This is not something that should keep you up at night. So if you have a list of things that keep you up at night, I mean, I know I do, this should not be among them. I'm not saying it never happens. I'm not saying that you shouldn't try to put your controls in place to try to be as timely as possible with these. But people have had to pay penalties with respect to enforcement actions, sometimes for fairly minor stuff, but it's not common. And I'm not expecting it as frequently with this current administration.
Do you want to mention
Go.
being more on the radar if you're
So some of our clients, either for one reason or another, are on the radar for Section 16 filings or for any of their filings. Either it's because they do business with the administration, they have done, something has occurred that's very high profile. I remember when, I think it was George Bush had a late Section 16 filing because someone at the company had not, filed it. It was years ago. And for some reason, people were making a big deal about it. I remember looking at he was late for a day on an option filing. So it also goes to the fact of if you have somebody famous on your board, you may want to make sure all their filings are on time. I'm not sure anybody cares, but the weirdest things make it into social media, which is sort of a glut for content. Okay, so this is what we recommend. Oh, how are we doing on time? We have all sorts of time. Okay, so this is what we're going to recommend with respect to changes to your company policies. First things first, you want to review your insider trading policy because what the goal is here is to ensure that insiders notify the company of transactions and company securities on a timely basis. Now, here's my recommendation. Timely basis does not mean the day after, because remember, you get 2 business days. If they're, and I'm also don't consider like an option grant under this because the company is going to know when they're going to grant options. Many times we recommend that you start preparing the forms before the grant has been approved. And so you don't have to scramble afterwards. But if someone is going to be doing a gift, or if someone knows that they want to be able to, they have a kid going to college, so they want to sell some stock. Many times we will see reporting insiders be required to inform, if they're a Section 16 filer, you're required to inform someone, whoever the stock administrator is, sometimes 2 days in advance, to make sure that they can be prepared to make the filing. Because like we said, that 2 business days is really a very short period of time, particularly if you're having to get execution information. Unlike a stock option where you have all the information, if someone is going to be doing a trade, you have to get execution information, pricing, et cetera. And you want to make sure that you can do that and not be stressed about making the filing. Look, if there's a mistake in a filing, you can amend the filing. Keep in mind, in case you're wondering, no, you really can't pull a filing off Edgar. I think I've seen it once where someone accidentally filed under the wrong code. And so it was filed under the wrong person's name. But generally speaking, other than an example like that, you would simply amend the filing. Again, not the end of the world, but you prefer not to do it. You also want to track derivative securities internally to ensure timely filing. So if you were going to tell somebody to track sort of their internal derivative securities, what would you tell them to keep track of?
So you want to flag specifically RSUs with vesting dates, because it's the vesting date of RSUs that require a report. It's a little more complicated than that, but assuming you're reporting vesting of your RSUs, it's the vesting date, not the later settlement date, not when someone gets around to issuing this underlying shares. It's the vesting date that required. So that's a big one. Another one is performance grants. On the US side, performance grants that are tied to something other than stock price. So real legitimate performance criteria. Those are not required to be reported on the US side until that performance criteria has been met. You can report them voluntarily, but if you
But it's hard to report something because it's.
you don't
don't really
the
know
number
what you're
is
reporting.
the board has to pretty much determine what the
Right.
what percentage is going to be awarded.
Mhm.
So they're not required to be reported on the US side until that board determination has been met. But keep that in mind. If you're reporting your performance grants on SETI at the time of the grant, then, and you're not doing that on the US side, you're going to have to report those performance awards once within 2 days of when the board makes that determination.
So, and the reason we think, and so when you're tracking all of these things, it's mostly to make sure that, you have all the names, amounts, type of security. And if there's, an explanation that you want to make, like if someone is either going to be, either making a gift or they're transferring something or they have to report holdings in a particular entity, you could add notes to disclaim beneficial ownership or things like that. So the more you know about things in advance, particularly if you think it's something that's unusual and you'd like to have an explanation, there's a place for notes. So you can add explanations. And but the sooner you find out about these things, the easier it's going to be to try to put these things together to get it sorted. So in other words, so in this, and we would also strongly suggest that either with a memo or training or otherwise, that directors and officers are, at least briefed on the requirements of Section 16 reporting. That both helps compliance. So then you're not having to explain it every time or go chase information. We also recommend that you modify your D&O questionnaires so you can verify either holdings or transactions on an annual basis. One of our clients they specifically modified, some of their director and officer questionnaires, which they used annually, because they were noting they were getting lots of questions about a particular type of either estate planning or otherwise. And so rather than face that question every time, they added it into their D&O questionnaire to kind of explain, yes, we've been noting that some people have been doing this. Let us know if this is what you're doing, either for estate planning purposes or otherwise, so that we can make sure that we are reporting properly for you.
And I will add on that, when your officers and directors verify their annual holdings, there is a process to follow on the US side. So if someone reports holdings of 1 million shares on their initial Form 3, and they say they do nothing else, and then when they look at their D&O questionnaire, they tell you that they own 1.5 million shares. I just don't suddenly start reporting 1.5 million shares. You have to account for that. You either have to say, oops, we filed for the wrong number from the beginning, and you have to amend that initial Form 3 report, or you have to say what wasn't reported throughout the year to account for the additional shares. So it's not a quick, it's not overly complicated, but you don't just change the number. So when your insiders are looking at those holdings, there's a process to be followed to fix incorrect information.
Right. So, and sometimes it's a typo. We've had that before. And that's also fine. And again, that's where, the notes section comes in so handy. So if something occurred and you want to make sure that people understand sort of the reason for it, particularly like if you're having to change the number of holdings, but there have been no transactions, I think we would typically include a note that would indicate that, to correct
due to an administrative error, and then you fix the number.
Yeah. Administrative error is going to be your favorite friend. So that is something that we frequently see. Now, one last point, and because you may not have to make public, and we don't expect to have to make public disclosure of late filings, this last bullet, I still recommend, but it's less of a big deal. But when you have somebody who leaves, one of the things that we will do is we have some forms that says that verified, like, look, you have reported everything that you are required to report so that we don't need to do any cleanup filings on a Form 5. You know, because at some point, you know, they're going to be on a beach in Bimini somewhere, so you're not going to be able to reach them. And you want to make sure that that filing is correct and you've captured everything so that, you know, partly for your own internal controls. So many times when someone leaves, we will ask that the company just, you know, have them fill out a form that verifies that all of their filings have been made. And so and then you keep that in the file. So if something comes up later, you can pull up a piece of paper and say, but you told us everything was fine. I've lost my chain of thought. Anyway, but so I think we're coming close to the end of sort of our prepared remarks. What Tiff and I were going to do is kind of talk through what we see as some of the most common questions that, you know, in terms of reporting. Some of this we've already touched on, but things that we see happen most frequently. But before we do that, I just want to kind of focus on a couple of things. You know, first things first. Let's go through first things first. You know, before we go into our common list of, you know, questions and so on, is do not assume that you're going to get an exemptive order. I currently actually have a bet with one of my partners that people who are SETI filers will be exempt. I don't know that for sure. In our conversations with the staff, they would not tell me that because they're very careful about those things. I didn't even get a nod, wink, wink. So trust me, I tried. But I actually have a bet going that I think Canada's going to be exempt. However, I don't know that they're going to get all of that done by March 18th. So prepare as if you need to do the Form 3, even if it goes away. Because it's not like a filing fee with the SEC to get an Edgar code. If someone gets Edgar codes and then ultimately they don't have to report, you know, no harm, no foul. It's not like their name's going to show up as a delinquent file or anything if they ultimately don't have to report. They just will have gotten codes and don't happen to need them. But start early on that one. First things first, identify who is actually going to need codes. And then once you have that list, I would first ask them, because again, you can go to that website, figure out, do they possibly have old codes? It is very common for a lot of the people that we work with that they were previously on a board that required codes, but they haven't used them in years, kind of forgot they had them. So double check it so you can expedite that process. So, you know, figure out who they are once you've got your list, you know, if they have old codes, and then start working. And there's many places you can get codes. You can either generate it internally to work on that, or you can contact us or your law firm or whoever to assist with that. You can also reach out to your Edgar filer, because I know that they're going to be doing a lot of this with respect to getting additional people codes, because they do it all the time. So, but you know, we recommend you can absolutely try to do this on your own, but it's not simple. I mean,
it's not, there are a lot of steps. It's not rocket science, but there are a lot of complications. There are a lot of formatting requirements. The SEC is very picky. Literally, if you fill out a Form ID application and you have a typo in an email address and you don't catch it, and then you give them a different email address as the email address, maybe they don't see it, but they might reject it. And then you just have to start over.
Yeah. We think they're going to be overwhelmed enough that if there is something small or if there's a problem, I think they're going to be more willing to reject things because they just don't have time.
It depends who your examiner is.
Yeah. and you don't get to pick. So we don't get, you know, it's like, you can't just call and say like, hey, I'd like to work with, you know, so-and-so. You get who you get.
You get who you get.
And so, yeah.
When you upload, I mean, this is an aside, but if on the Form ID applications, when you upload the signed and notarized application to the SEC. So you're doing this all electronically.
Mm-hmm.
When you upload that signed and notarized application, there are very specific formatting requirements, and it's not complicated, but there are a lot of little steps. So your filing agents will know those. If you have an Edgar Next administrator that has
been doing this,
they should be able, you know, they should be able to figure it out. All the instructions are there. It's just there's just a lot of steps.
Are we still having to use pencils to shade over like notarization?
If someone notarizes with an embossed seal, which most people have stamps now, if there's a stamp and a seal, fine. If there's an embossed seal and it's not legible on the scan, we don't need the originals because they don't go anywhere. We just need a scan. And that's what you're submitting to the IRS. But if
The SEC.
the SEC, they are very like in kind in their really ridiculous requirements. An embossed seal will not show up on a scan unless you rub pixelwood over it or carbon paper. And the SEC will reject any Form ID applications where the seal is not legible.
Yeah. But like we said, I think most people tend to use stamps now, and so which are very clearly visible and so on. We just, wanted to make sure because some people do still have the embossing.
And usually a notary expiration date is required. So on the Canadian notaries, we usually add notary commission does not expire. I don't think they reject them on that basis now, but again, it depends on your examiner. So it's always good to just add notary commission does not expire if there's no notary commission date.
Yeah. And please note, we've actually found that the notarization, especially for people that are and we talk about Canada a lot because we have a lot of friends and clients in Canada. Whereas getting a notarization is not really a problem. But we also have clients in a number of other jurisdictions where a notarization is a big deal. And it's very hard to get.
Virginia, the state of Virginia.
Yeah.
It's the state of Virginia.
Because they do electronic notarization. But in other words, if you are, but if for some reason you don't want to use that and you want to go through your local jurisdiction, you just need to make sure that you have planned in advance to be able to get that because the SEC will not waive the notarization requirement. And so we won't be able to submit without it. It'll just get rejected. So that can be problematic. So anyway, so going through, it's just like, figure it out, going through that list. And then the next part of this thing is going to be putting together, because many of these people, it's not like a brand new company or it's not like they're joining. These people have been officers and directors for many times, years, and they have a long list of equity securities. So putting together that spreadsheet and that identification of, date of grant, the pricing, the vesting, all of that information so that it can be, because all of these things are different line items on the Form 3. So gathering that information internally is critical because like we said, we are expecting a very, very high volume of requests just with us. Everybody else, there's a number of law firms are going to be working with this. And so it's most, let's just put it, it's going to be most cost effective for you if you have all of the information kind of packaged for that initial Form 3, because we can certainly help you kind of like look at it and look at the SETI filings, et cetera, or other, wherever the jurisdiction is. But, again, it will be most efficient if, you have already put together that list.
Yeah. So a comprehensive spreadsheet with grant dates, strike prices, vesting dates, ShareWorks, for example. I know a lot of people use ShareWorks. You can print everything under the sun in ShareWorks, and that's pretty much what's needed on the US side. Right. A line by line item for each person with everything they have and all the information about each of those grants, because all that information is not on SETI and it's going to be required on the Form 3.
So anyway, so we'll go through some of in terms of reporting, some of the ones where we see some of the most common questions. One, foreign exchange rates. You report in US dollars. So how do you do that?
So we always report in US dollars. So if you have a Canadian dollar amount, we just convert it using the Bank of Canada exchange rate on the date of the transaction. And we put it in a footnote and say, the Canadian price of blah, blah, blah was converted to US dollars using this exchange rate, but it's always reported in US dollars, right? Even if it was done in Canadian dollars.
Right. And of course, all reporting is required to be, in English. So if you are in a different jurisdiction, again, all of the reporting, the footnotes and everything else is in English. And that's not a new requirement, but it's now recently been added as part of this into Section 16, because now with foreign private issues being added to it, you have a wide variety of people around the world that will have to be filing, but it does have to be filed in English. So let's see. So let's talk about RSUs. So actually, let's put it this way. what is the derivative security that you find you have the most questions and concerns with? Not concerns or problems, but just the most questions with, and that, most conversations about in terms of trying to help people manage their complaint reporting.
Restricted stock unit awards are definitely the most. Performance probably second.
Mhm.
Because it's reported very differently on, well, I keep saying Canadian, that's what we normally do, but it's reported very differently on non-US than US reporting requirements. So if a restricted stock award can be granted in cash or stock, it must be reported as a derivative security in table 2. And that means that every time there's a vesting event and it's effectively moving into common shares, that triggers a Form 4 reporting within 2 business days. Every vesting date.
So we've had clients who wanted to vest monthly. And, we said, look, you can do what you want. You should set up your compensation programs the way you want them done. Just please note that if you have monthly vesting, that means you're going to have monthly Form 4 reporting. And it could be that even if it's just the vesting and so on, that it may look that, when people are looking at these forms, they may be like, gosh, there's a lot of insider transactions going on there. But nonetheless, so if for some reason, even though you can also, if it's only payable in shares, you can just report it in table 1, just the one time. But there's a downside to that too. So in other words, if it's only convertible into shares, cash is not an option. You have the ability to simply report it at the time of grant as common shares, not as a derivative security, but just as a grant of common shares. And then we'll add a footnote. But, we have seen downsides to doing that.
Yeah, so in that case, you're done. You don't have to report each of the vesting, but any of the reporting agencies will pick it up as common shares. Doesn't matter what kind of footnote disclaimer we use with vesting information. They're going to report that individual owns that higher number of common shares, whether or not they're vested or not. The upside is you don't have to report all the vesting events.
Yeah. And I think we are essentially at kind of the end of our time. So wait, last words of wisdom? Other than look, is it a pain? Yes. Both getting the codes and reporting. Absolutely. We completely concur with you. But it's just, look, we're here to help. Reach out to either the people you work with at Dorsey, reach out to your Edgar filer if you want to, if you need help getting codes. There's a wide variety of people that can assist you with this. But I think our big advice is start early.
Start now.
Yeah.
Start 2 weeks ago.
Yeah. It's just like, or as one of my contacts at the SEC said, he said, look, prepare for the worst and hope for the best. So we're still hoping that we get, broad exemptive relief. But unfortunately, I have a feeling that that's going to take a while to come through. So, and I don't think honestly that we can wait for it. But anyway, so that's it. We very much appreciate you spending the hour with us. We hope this was useful. And we'll have the reporting documentation. So we'll have the information is available for download and so on. But and feel free, of course, if you have any questions, to let us know. But thank you for joining us. We are all hoping for broad exemptive relief well in advance of March 18th. But I'm a little worried that it's going to come very, very, very late in the process. So anyway,
Thank you.
thank you. Bye.